morning. We are officially live only on onedealaway.com. And welcome to another episode of Money Matters. And today is, what is today? Tuesday? Wednesday? What are we talking about here? My gosh, it's already Wednesday. I mean, time flies when you're having a good time, learning a lot, studying a lot, doing a lot, investing a lot, and hopefully making money. So, today's episode, we actually have a bit of controversy to cover. It's a bit of a controversial view of what can we expect to sort of happen in the future. And so I wanted to make sure that we look at both sides of the coin because, both have a good argument, so to speak. We're going to look at one report that says V recovery is in, has been in, it's not going away, and you'd be silly not to participate. The other one says V is not coming back. It's bad. It's going to be bad. People are going to be suffering for a while, so we shouldn't be accepting that stuff. Then we're going to actually take a look at the new potentially executive order, or I don't know how else to call it, that is coming out of White House that could affect a lot of companies and businesses. It has a potential huge effect onto institutions of higher learning like colleges, universities, as well as people around the world who have been traditionally having jobs in United States. We're talking about legal folks that have jobs here. And so we'll see kind of the report that is coming in of what's possibly happening. We're going to take a look at sort of what is the difference when it comes to holding off the stocks. What is the difference between retail investors, which is basically you and I, and institutional investors, meaning hedge funds or pension funds and that kind of stuff. And then we're going to take a bit of a dive into some reports as to what's going on with like Hertz and Avis, and like what is the expectation coming from one of the leaders in the world when it comes to the financial sector. So just so we can dive deeper and understand sort of what's happening. Why would a company that is bankrupt have almost 900% return in like 2 months, and what we could expect to be the future? Is it going to continue doing that, or can we expect some pullback? And of course, we're going to take a look at the markets to find out of what's exactly going on, what's happening, take a look at the prices. And then we have some incredibly amazing, super bullish news for all of my crypto enthusiasts. And I am one of them as well. So this is very exciting stuff. And so let's do this. And good morning, good morning, good morning. All right, let's go in and jump in and take a look at some of the stocks and indexes, actually indices in whatever the stock market. Let's take a look at the stock market. So S&P 500, obviously, it wasn't performing as well, but of course, over the course of 5 days, it's been doing pretty darn well. Dow Jones, pretty much the same thing. It was slightly down. 5 day is up. Kind of flattish though. Nasdaq has been pushing on up. I'm telling you, it's those technology stocks and probably the top five leading the whole thing. It's been up, 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 up. I mean, I keep going, and this puppy keeps on going up. So I guess we all know what is definitely going up. Now I want to take a look at what's going on in the crypto world. So in the world of crypto, we see that we have quite a bit of up as well. There's some stuff that is down. There's some stuff that is up. I should have done this before, but we can see MakerDAO, wow, 24%. And I want to say this is like a 24-hour period. So it's kind of interesting take a look at the stuff. For me, it's very interesting to sort of contrast and compare as to what's going on in different markets. So you have something like a stock that does, I don't know, it goes up 5% and we get very excited. And then you have something like real estate and goes up 3%, we get very excited. And then you have something like bond. If it goes up 0.5%, we get excited. And then you go into crypto, and it's like we're expecting 10-20% returns on a daily basis. So it's quite silly. It's quite ridiculous. But that's where we are right now. So let's see. Maker, Kyber Network, Divi, Zilliqa, Nano, Blueprint, Ox, Aave, um, Elf. Is that how you say it? AELF? AELF. My gosh. Uh, I mean, performance, incredible performance, especially if you go from Lumpring up to Maker. I mean, we're looking at 12 to 24%. That's a huge change, huge jump. Biggest losers: Hedge Trade, Unibright, Cardano, Energy, Engine Coin, Cosmos, BAT, Digibyte, IOTA. And again, even the biggest loser, aside from Hedge Trade that went down almost 10%, everything else is, 2 to 4% return. Overall, I think it's doing pretty okay. Now let's take a look at what's going on with the futures. So stock futures, markets, kind of what's going on. What do we think that's going to open today? So if you take a look at sort of what's going on here, you can see that Dow is slightly down, S&P neutral. I mean, okay, tenth of a percent up. Nasdaq slightly up. Small cap negative. S&P VIX negative. DAX negative. CAC 40 negative. FTSE 100 negative. A lot of negative. A lot of negative this morning. I can see over here stuff in parts of Asia is a bit on the positive. Bank Nifty over India is doing quite lovely, but they're not. I don't know that this is necessarily futures for them because I think it's closed market, right? Because it's 6 o'clock their time over there. So, but yeah, overall, when you take a look, it's not. It doesn't look like it's a good day for the futures whatsoever. All right, so now let's take a look at before we jump in. Do you buy? Do not buy? I've been following a bit of what's going on with Hertz, and so this popped up, and I was very curious to learn about it because again, they filed for bankruptcy, the stock plummeted, people jumped in, the stock rallied, but I didn't know how much because I wasn't following it that closely. So when I came up and I was like, oh, this is really cool, I'm gonna definitely take a look, and I figured I share with you because they are pulling back, and Deutsche Bank is questioning the depth of buying. So let's take a look. Deutsche Bank acknowledged that fundamentals are getting less bad. They didn't say good, they said less bad for rental car companies, but questioned how real the recent rallies have been. So, her stock tumbled 24% to $4.18 after rocketing 115% on Monday on record volume of 533.9 million shares. The stock had run up. These are some crazy numbers, y'all. So I hope you're listening and watching and sitting down. Don't drink coffee right now. Hold on. Let me read this and then you can drink coffee. The stock had run up 574% over the last 3 sessions through Monday and 888% since the closing at records low of 50 cents on May 26, which was hit right after the company declared bankruptcy. That's insane. That's insane. So if you had jumped in at 56 cents, you are now holding over $4. So that's an amazing return. And we're talking what now is June 10th. We're talking what, like 6 weeks? That's a cryptocurrency kind of return on daily basis and even monthly basis. So on annual, the yield is insane. So congratulations if you have been able to obtain this and your bets have proved accurate and you have been able to make some mad money. So congratulations to you. Avis shares sank 9.8% Tuesday after climbing 36% amid a 4-day win streak through Monday and soaring 73% since May 26. So Avis not so bad, but Hertz, boy, you did good. Now, the recent sharp gains in the stocks have come as part of the broad strength in travel-centric stocks. As the reopening trade continues to lift, travel-centric stocks as the reopening trade continues to lift travel centric stocks higher, we find ourselves in the camp of conceding that it absolutely could continue, but also questioning the true depth of the buying in what increasingly feels like a capitulation type short squeeze being exacerbated by high frequency trading programs. So they put in some charts over here that you can take a look at. So you have red is the Avis. And the blue is the hertz, and then down below is they're looking at sort of this is the price obviously on top. Down at the bottom is the short interest, so they're looking at kind of comparing this stuff now. Then he's noting that trading volume in hertz stock on Monday was nearly 4 times the number of shares outstanding. That's a bit on the crazy side of things, but yeah, I mean Monday was a very no Monday bullish day. Hold on. Yeah, Monday was like record high, and then it sort of dropped, which it, uh, it is typical when you get record high. It typically, not always, does come down. Um the key operational metrics, such as volume, revenue per transaction per day, and fleet costs, are likely to keep getting less bad as the summer progresses. But he was also saying that some of the it's difficult to analyze some of the fundamentals of the stock because of the bankruptcy, right? But also because so many people have been laid off and they have a brand new CEO. So he's saying, that there's some unknowns over there. The view is that the risk reward is skewing a bit negative, and he kept his rating on Hertz as hold and his stock price target at $3, which is 28% below current levels. For Avis, he reiterated his hold rating and actually raised his price target to $24 from $16, but his new target was still 18% below the current levels. So there you go. If you have been bullish, I guess there's a reason to be bullish. He's saying that the rental demand, he's suggesting that the rental demand has picked up. A number of Americans who emerged from stay-at-home orders in May have increased and have decided to travel by a private vehicle as opposed to airplane, train, or some other form of public transportation. So there you go. That's what's coming out of the Market Watch, which makes me want to kind of come in and bring up a different story of the sort of the biggest stock market bets among institutional and rental investors and kind of what the ranking is. And so I will scroll down some so you can take a look. On the left hand side, you see institutional. On the right hand side, you see retail. And I'm going to have some coffee. Okay. So you can see that there's no match, right? Institutional investors are holding a particular thing. And I don't know, can you spot what it is? What are you seeing that sort of institutionals are holding and investors, retail are holding? So number one for institutional is Visa. For retail is Ford. Adobe versus GE. MasterCard, American Airlines, Alphabet, Delta, PayPal, Walt Disney Company, right? So there you go. This is one of those things that is very interesting to kind of take a look. And when I look at this stuff, without even reading the article, when I just look at what you see on the screen here, is when I look at institutional, it's technology, right? Payment processing, technology. That's kind of what I see here when I take a look at the institutional. When I took at the when I look at the retail investors, I'm going with, these are like heavy hitter, blue chip that people are very familiar with. Ford, GE, American Airlines, Delta, Disney. So things that people are very familiar with, that people understand sort of, Ford. Well, they make trucks. We all know that. Like, it's easy, right? Gee, oh, they make electrical appliances for homes. They do way more than just that, right? But American Airlines and Delta, well, they've been in a slump, and so the people are going to travel and things are reopening. So, yeah, that makes sense to me of what we're going to do here. So, and then Disney, it's easy to explain, and of course, everybody watches Disney or wants to go to Disney World. So let's take a look what the authors of the article had to say. There's a pretty big gulf between how professional investors manage money and the bets made by average people. Well, of course, the top five most widely held stocks by each class of investors is what we just able to see, and then we'll see the top 10 when we actually scroll down lower. But reference symbols, let's take a look. So if you were to look at some of these things, that you will see that out of the 10 stocks that we just mentioned, uh, MasterCard is the one up. Google Alphabet is up. Uh, PYPL, oh, PayPal. PayPal is up and Microsoft is up. Everything else is down. So the symbols that we've actually looked at, so the 10 symbols, out of those 10, only four are up. And you will notice that all four are actually on the institutional side. So you will notice that it's Google, also Alphabet, MasterCard, PayPal, and Microsoft, which is not actually listed here, but I think it's in top 10. So, um, okay, here we go, here we go, here we go. Retail investors are either betting that air travel is going to come back in a big way, or they're simply picking the stocks that have lost the most value. Institutional investors, in contrast, are betting on electronic back office products, particularly payments. So, like I said, institutional are going more on the technology end. Retail are going, whether that they're betting that the travel is going to pick up, picking something that has most value, has dropped the most, and they're hoping it's going to go up the most. But my argument is also that folks are likely going with what they know and understand. These are name brand companies that everybody you go around, everybody knows what it is. They kind of understand it. So it makes it easier and simpler to invest into that some of those things. That's sort of where my argument kind of stands. Um, Now they are what they did is they reached out to DataTrack co-founder Jessica Rabe, and she basically looked and kind of reported on some of the things. They took at the account from what retail is doing from Robinhood, and they're basically saying, well, this is an app that is favored by millennials. And one thing that they are noticing is that it's not prioritizing clean energy investments. The lack of environmental, social governance friendly names at the top of the Robinhood leaderboard contrasts with the notion that millennials will only back companies that align with those characteristics. I remember reading and listening about that whole concept of, more and more, millennials and the new generation, they're going to want to bet on the companies that are clean energy and they're doing the good for the universe and all of these different things. And now we're getting a report that perhaps that's not necessarily the case. Perhaps capitalism is capitalism and people are looking for the best returns, safest bets, and it doesn't really matter what the company does or doesn't do. It sounds like that sometimes even the ethical things of what the company may or may not do also doesn't matter, because people are looking at the pure numbers potentially, or just sort of the names of the company of what they're familiar with. So that was an interesting piece for me. I don't know how you feel about it. So let me know in the chat. Let me know in the comments if you're not watching live. And if you're not watching live, you're missing quite a bit of our show live. We do this every single morning at 7 a.m. Eastern Standard Time, only on onedealaway.com/live. So I hope you will join me live tomorrow if you're not here today. And, as soon as we're done with the report, we go in, we jump in a chat, we're able to hang out and chat. We just don't necessarily record and post that on YouTube. If you're on YouTube watching it because 7 a.m. just doesn't make sense based off of where you live, based off of, the time zone that you're in, you don't wake up super early, or you're already asleep, or you're, at work, then do watch on YouTube. Please make sure you do subscribe, hit the bell button so you get notifications. And, whenever possible, come and join me live. I'd love to be able to hang out. All right, so let's finish this article before we jump in and change our our topics, so to speak. Now, payment companies won't be as much in demand in slowing economy, right? This is sort of looking at the institutional, like what are they doing? However, when the consumer spending falls, so it might be seen as a macro bet on an improving landscape. On the other hand, many investors believe that coronavirus episode hastened a technological shift across the global economy, and the companies that dominate the electronic payment industry may simply benefit from picking up a bigger share of those transactions. And I sort of agree that if we are truly going into some sort of not as recovery, not a slump, perhaps we don't see as much of the payments. But I think people have been going out there. You have to go and buy stuff, and everybody is moving a bit more global and a bit more digital. So it makes sense to move into that market and kind of benefit from that shift. Anyways, here's the top 10, and you will notice I highlighted only one company matches on both institutional investors and retail. So in institutional, you see that we've covered the top five: Visa, Adobe, MasterCard, Alphabet, PayPal, Salesforce, Microsoft, Alibaba, United Healthcare Group, Charter Communications. And then on retail, you have Ford, General Electric, American Airlines, Delta, Walt Disney, Carnival, GoPro, Aurora Cannabis, Microsoft, Apple. So there you go. One notable spot to overlap is Microsoft, which makes both lists. So this was really interesting thing to take a look at. And if you had recalled that out of the companies that were listed at the top, there is only, well, actually, you can see it right here. Hold on, let me switch the screen. You can see it right here. Obviously, you can see that the retail investors, the 10 that they have invested in, only two are positive at the moment, right? At the moment of the report, which is Microsoft and Apple technology, right? Then you look at the institutional, and out of 10, they have one, two, three, four, five that are in red, five that are in green. So perhaps a lesson that all of us can take, because we are retail investors. I mean, I don't know. Maybe somebody watching this over here is managing a fund. So awesome for you. Congratulations. You fall on the institutional investor. But for everybody else, for the retail investors that are watching this stuff, I think it's important. There's a lot we can learn from institutional investors, from fund managers, from experts in the field. And they do know things that we don't. They do see things that we don't, because they're the insiders. They're inside of the market. And it's important, I think, to be able to learn from them. And so it's important to watch reports like this, channels like this, to monitor, to read, to understand of what are they doing, because they are insiders. And it's much easier when you understand the moving pieces, because they're staring at this 24/7, 365. That's their job. And for most of us in the retail, you have a full-time job, maybe you have a business, maybe you have a family. You don't have time to necessarily geek out on this all the time, so you don't necessarily understand what's going on. So I think it's important to join in for shows just like this, to be able to actually learn and to be able to grow and to be able to develop, so that you don't invest in some of these things that honestly, frankly, don't make sense in my view. But then again, that's just me. Okay, so since we're talking about some of these investments and stuff, let's take a look at, are we going into the V, or are we not going into the V? Like, what's going on? And we're going to take a look at two different reports that are basically sort of opposites. First one comes from Zero Hedge, and it says, what? No V? World Bank forecasts subdued recovery in global economy in 2021. So this is very similar to what I had shared with you yesterday, day before yesterday. I can't keep days straight anymore because, we're constantly doing stuff. But we did talk about it, that the World Bank has released a global economic prospect reporting describing how the COVID-19 has this giant, devastating blow on the economy. And that's exactly what they're talking about here in Zero Hedge. So they're talking about how the report, global economy will basically contrast for the first time since World War II, in emerging markets are actually going to be the ones that feel it for the first time in about 60 years or so, right? And they're expecting that 70 to 100 million people will be thrown into instant poverty. So, what the report says is that 2020 baseline forecast for global GDP would be a contraction of 5.2%. Emerging markets will shrink by at least 2.5%. The report said, adding it will be the worst performance for the data since early 1960s. The speed and depth at which it hit the developed and emerging economies suggests a sluggish recovery will be seen in 2020, with low probabilities of a V-shaped recovery this year. So 2020. Additional rounds of stimulus to restart the global economy will need to be seen. And then it shows the figure of the global recession from 1870 to 2021, and you can see the sort of what has happened, kind of how in 1871 we had this pandemic, right? And kind of how long it took for it to really tick up. But you also notice something very interesting. The blue line is the GDP. The red is the per capita GDP, right? And you will see that the per capita GDP rose much faster than did the GDP as a whole. But then you have in the last recession, that was the 2008, that there was an overlap where the GDP actually went way up above per capita GDP. And then on the right hand side, you have the global GDP growth, and it's kind of showing what's been happening. And you can see that it goes back from 1871 all the way till now. And you will see that this looks like it was the 1940s, that that's where it was sort of the worst. So we are basically right now, based off of this chart, we are basically at the level that we've had in the 1930s and the 1910s. So it is and much deeper than we were in the 2008. So what they're basically saying is that, yeah, there'll be a recovery, and depending on the policies, both monetary and fiscal policies, it will depend on how quickly this changes and how rapidly it grows. And they're saying, we'll need to see government sort of step in and do stuff, which they have been, but they're starting to slow down and pull back. So I think we might see another potential challenge before the next bump. But again, I don't know exactly how this is going to work out. The World Bank expects developed companies will contract by 7%, led by 9.1% decline in growth for Europe this year. Breaking down the numbers, the US is expected to contract by 6.1%, while China could post a 1% expansion. Very interesting to kind of look at that stuff and say, wow, Europe actually looks like it's going to do probably the worst, followed by potentially United States, and China could potentially be doing just fine. Uh, Now, they are also saying that there are two alternative scenarios. The first is a COVID second wave that triggers another round of travel restrictions that would result in the worldwide economy plunging by 8% this year. If the virus can be controlled and reopenings are continued throughout the pullback for the second half of the year, the contraction could be around 4%. Still, this figure is twice the depth at which it was during the recession a year ago. So, and then they go in to kind of say, the World Bank latest report paints a grave picture uh, on the near term and does not support a V-shaped recovery, but equity futures believe the V-shaped recovery is coming, as you can see it here. So again, here's the part where we see sort of a mismatch between what's going on in the economy, what's going on in the fundamentals and stuff, and what's happening in the markets. And so it's definitely going to be interesting piece to kind of ponder on. And we've been talking about it back and forth as well. But now we're going to take at the report that says this is not a fake rally. Like this is a V-shaped recovery, and you're silly not to participate. And I know that this could be potentially hard if you're watching and you're saying like, "Hey, I come to your channel because I want to learn of what I should do, and you need to tell me of those things." And I'm not a financial advisor. I don't tell people what to buy, what to sell, what they should or shouldn't do. I will share with you on occasions of what I do, but this is really to get you to start thinking of why would somebody say one thing versus another. I think it's important to look at the competing ideas into controversies to understand of where people are coming from and why they might be saying what they're saying so that we could actually form our own opinion. And so some of the things you might agree with, some of the things you might disagree with, but I think it's important for us to engage into the discussion of the back and forth because that's the time when we learn the most, right? And you can then discount it, but at least you're informed to understand and see the other point of view. And that's the reason why we're doing this stuff. That's the reason why I seek to sort of have my own biases questioned to see, am I right? Am I wrong? And how can I improve? Like, what do they see that I don't see so that I can learn? Now, this is coming from Seeking Alpha. And so he's a long only momentum newsletter provider, ETF investing. So that's basically what he does. So, how can the stock market be so strong when an economy is so weak? And is this a fake Fed fueled reality that is destined to fall? That's been a question that I've been having, and I'm sure that you are having as well. This rally is for real, and it's more than just a Fed juiced flash in a pan. The broad equity market is firing on all cylinders for the first time in well over a year, but on June 5th, there were actually no stocks making the NYSE news new 52-week lows. So he's basically saying that the insiders and smart money participants aren't liquidating stocks as they were earlier this year. So then he provides a chart of the NYSE Arca Oil Index, which is basically trending higher. So you could see that there was a low. This is that March piece, early March, and it's been actually trending kind of higher. So, they're sort of looking at these charts. Now, that was the chart is telling for it lets us know the informed investors, institutions who typically control these two economic sensitive markets foresee no significant economic trouble ahead. Now, if the economic outlook was grim, as recent government data suggests it should be, the stocks that are most economically sensitive would be in decline. Instead, we see quite the opposite. So he then takes a look into a few different markets that we're going to take and explore. But he's saying some people are objecting, isn't the stock market rally mainly the result of Fed's QE intervention? And he's saying, yeah, liquidity is the first rule of every bull market. However, the liquidity alone does not move the stock prices up, which I agree, right? You have to have a demand. So liquidity is just there to give you an ability to do that stuff, but somebody has to actually do it. Now, whether it's a person or a robot, it doesn't matter. That robot is built by the person. So he's arguing that there's a true indeed demand, which is what is boosting the prices up. Big investors were more than happy to hold on to low yielding or even negative yielding sovereign bonds. If this class of informed investors truly believed that the economy was doomed, their money would be chasing safety, not capital gains. Now, is this rally destined to fail? His answer is in the negative. If there was a strong possibility of an imminent rally failure, we should have we should have already been, oh my gosh, I need to keep drinking coffee. We should already be seeing an above normal number of stocks making the new 52-week lows. And he's saying we're not. We're not seeing any of that. Actually, on June 5th, there was zero. So growth stocks are an important consideration for when this group isn't performing up to par. It's generally a safe bet that there's something wrong below the market surface. Growth stocks, as reflected on the following graph, of the Russell 1000 Growth Index are doing just fine. And you can see they are definitely in a very clear bull market. There's no doubt about that. I mean, it's a very clear picture. Anybody can see this stuff, right? Now, another economically sensitive industry is the semiconductor industry, and this group has performed exceptionally well as of late. So you take the semiconductors, and a bit more volatile than the Russell 1000, but again, very clear uptrend. The financial sector, banks are usually one of the first industry groups to show relative weakness. This group are on the up and up lately, with several major banks stocks making impressive strides in the last several days. Now, this one is not as clear on up, right, since the March. It's sort of a bit of sideways, but it looks like at some point, and okay, here we go. This is May. So it looks like as of maybe 15ish of May, roughly speaking, because there's no exact dates here. I don't see them. Yeah, it's definitely starting to go up a bit more sharply than I would prefer. But, it is going up. Transports has done well. Dow Jones Transportation Average, which is up 5% in just the last few days. So, again, this one has sort of been kind of sideways again till about mid-May and is starting a clear upward cycle. Market volatility as measured by the S&P VIX index VIX meanwhile is also supportive of the bulls. It has fallen to its lowest level since late February. So you can clearly see it that yeah, we've seen a huge rise from early March till about mid-March, then we've sort of seen being kind of going down. Slight kind of up and down motion, which is normal, but overall the trend is down. It looks like a bell curve if you ask me personally, right? Uh, the charts we looked at here strongly testify to the major trend being up. I expect the equity bull market to continue. Accordingly, a bullish intermediate term, 3 to 6 months bias towards the stock is still warranted. So there you go. I mean, he does make a very good point. Uh, and this is sort of showcasing, because when we look at one thing, when I looked at stuff from Zero Hedge, this is just my interpretation of the whole thing. When I looked at the Zero Hedge, the reports that we're getting is that the economy is not hot, right? Economy is struggling, their problems, their challenges, unemployment's are high, GDPs are going low, the whole opening, not opening, fears and tribulations are, a challenge. We don't know what's going to happen. Is there going to be a second wave? And there are some reports that are indicating that second wave could indeed be coming with a vengeance as things reopen up, because we've seen the spikes in some of the states in the United States post Memorial Day weekend, where people are going up, hanging out on beaches, going out to the popular lakes and hangout spots, pool parties, barbecues, and that kind of stuff. And we've seen a jump in the COVID cases. So there is a potential that once it reopens more, we will see a spike. And if we see that, it could potentially go back to the shutdowns, more regular stuff, which could go back to shutting down the economy, creating a potential bigger problems and challenges, right? So that's on the economy as a whole side. Now, in the one article that we just saw right now, that one is focusing on the stock markets, and the charts are very clear what they're showing, that the market is in a bull rally right now, right? Now, is that going to last forever if we have to shut back down again? I don't know. Nobody does. Who knows? We'll see. If these companies that people are boosting and buying start reporting lower earnings, as the earnings reports kind of start coming out, will the prices start dumping? I don't know. It's possible. So anything is possible, but overall, we are seeing that the market on one hand and the economy on the other hand are telling very different story as to what's happening around the world. So economy basically tells us, yeah, this is not everything is great yet, and the markets are basically telling us on the technical terms that go ahead and bet. It is a clear up on swing, and people are making money. But if I was to jump into the markets, I would probably use the protective stops, right, and use the correct portfolio risk analysis of safely going into this stuff, but also making sure that if there's a downturn, that I am protecting myself and not riding this puppy back down if it was to continue. Okay, so here we go. Let's go in with the what's going on with the Bitcoin. Since we're on the markets, right? Let's take a look at this stuff, and then we're going to end with what's happening with Trumpinator. We're going to talk about what White House has been doing. But first, let's talk about the report that German stock exchange will list Bitcoin. Okay, so investment firm ETC Group plans to list a Bitcoin ETP on Germany's Xterra digital stock exchange in late June. London-based ETC Group will list the first crypto exchange traded production on Germany's Xterra digital stock exchange this term. Traders in the United Kingdom, Italy, and Austria will also be able to deal in shares of the new product. According to the ETF Stream, ETC Group announced on June 9 that Bitcoin Exchange Traded Crypto, or BTCE, an exchange traded product, will launch on Deutsche Börse Extra after it received approval from the German financial regulators. BTCE tracks the price of Bitcoin and is physically backed, right, by the cryptocurrency. So this is interesting piece. Not only does it track the price, but it's physically backed by the cryptocurrency. The Bitcoin will be held in cold storage by digital asset custodian BitGo. ETC Group CEO Bradley Duke said, the crypto sector has been held by concerns about complexity, accessibility, and governance. With BTCE, we are transporting Bitcoin into the fold of mainstream, regulated financial markets. Investors get the benefit of trading and owning Bitcoin through regulated security while having the optionality of redeeming Bitcoin if they choose. This is huge news. This is amazing news, and I believe that this is incredibly bullish for short and long term price of Bitcoin. I mean, we're going to see kind of what happens, but I can see that if it is indeed backed physically by the crypto, meaning if there's this fund goes up and they go from 1 million Bitcoin to 5 million Bitcoin, that the company will actually have to buy 5 million Bitcoin and hold on to it. Well, that would create like whales squared, right? Because they have to buy, additional funds for it, and that is going to boost the price. So now they're saying that not quite an ETF. The group stated it was offering BTC trading through an ETP structure, which is not quite the same as having an exchange traded fund. According to the firm, the hybrid ETP doesn't meet the price definition of an ETF in the European Union, as it's a single asset instrument. Okay, so that's one of the things that they're saying. So just to understand, but I think it's going to be interesting. I think people are going to jump into it. You have all of these people that are very curious, very bullish when it comes to the cryptocurrencies. They're just afraid of like, how do I get it? How do I buy it? I don't know how I feel about it. I was told don't put money on exchange, but I don't know that I understand what the wallets do and what these keys are and how do you keep them safe and what happens if I forget my password. So there's a fear to it. And I think that this opens an avenue for an average George, for mom and pop, for grandma to then put in a portion of their portfolio into Bitcoin and be able to generate gains. The additional piece that I think this also brings in is that now you actually have potentially larger investors that are going to put portion of the funds, like I don't know, insurance companies, uh, foundations, right? The endowments, retirement funds, and that kind of stuff. So I think it's definitely interesting. Now, despite the number of numerous applications, United States Securities and Exchange Commission has not yet approved a Bitcoin ETF for the public in the U.S. Yet, citing concerns over verifying asset validity, market manipulation, and the safe storage of physically backed assets. In March, Cointelegraph reported that the German financial watchdog BaFin announced regulatory standards local businesses need to adhere to if they provide crypto custody service. Any German business dealing with crypto is required to obtain BaFin's authorization. So there you go. I think that this is incredibly, incredibly bullish for Bitcoin, and it's going to be very interesting to see how and if the price of Bitcoin actually goes up. If we go above that 10,000 and 10,500 that they have been trying to fight, and when it lists, what that will do for the price. So it's definitely going to be very interesting. And if you are interested in cryptocurrency, in investing in it, in understanding how to buy it, and perhaps the ETP is not something that you don't want the derivatives that exist on the market, you are really curious about it, but you have no clue how to do it, and you are a total newbie, I am offering right now. Right now, it's absolutely free because we're still building the course. It's called Crypto 101. So if you visit onedealaway.com and you go in and sign up for Crypto 101 course, you actually get it absolutely free right now. So I invite everybody who is even remotely interested in the course to come in. It's very simple to register. It costs you nothing. Let me share the screen so you kind of get to see what it looks like. So you get to learn all kinds of things about crypto, the basic stuff. We're not going to go into programming and stuff. As you can see, it is $0. So you can come in, you can learn a little bit more about how and why. You can join me live on Zoom. Of course, you'll be able to see some of the additional courses that we have if you're interested. And if you're interested in additional courses that we actually offer on One Deal Away, I highly suggest you actually go into the academy, but because you're going to save a ton of money. Academy actually includes a bunch of different things, but if you're just interested in Crypto 101, just the basic stuff, and this course is very different from other courses you might have seen out there because we go in and explain some of the stuff, and I'll actually be teaching you basic stuff. Then I'm going to be connecting you with some of the other places where you can research and learn some additional components. But we also talk about how do you value things, how do you evaluate it. We go a little bit into the technical, a little bit into the fundamental, just so that you have an understanding of what this whole market is and how you can benefit from the bull market. All right. And now, final piece. Trumpster is at it. Business leaks Donald Trump sweeping visa reform job plan. And when I read Visa, I was thinking like, Visa accepted everywhere Visa? Or is that MasterCard? Whatever. No. We're talking about entry visa for employment and stay in United States. This is huge. This is going to affect a lot of people who are currently in United States, a lot of employers, and a lot of individuals who are in their home country, but were hoping or thinking about coming to United States. And it might potentially have a huge negative effect on the international students coming to study in United States. President Donald Trump would decide by Thursday whether to suspend the visa worker laws that now allow Fortune 500 companies to import their own compliant workforce instead of hiring Americans. And it's not necessarily, I do want to point out when I was reading this stuff, this article, it does lean a little bit against Trump. No, sorry, I'm sorry. It leans with Trump and against the corporations. And it's saying, yeah, the corporations are wrong. It's not that simple with it. It's not one for one. The way that the law is currently written is that the company has to prove that they cannot find local labor and are forced to hire an international labor. So it's not like you get to choose. It's not that simple. And clearly, whoever wrote this article, obviously, I'm very passionate about it, doesn't understand exactly how this works. And as somebody who actually has been working through H-1B visas and has had to go through immigration status and has very deep understanding of what all of this means, I deeply disagree with his commentary that the Fortune 500 companies, import their own workforce as opposed to hiring the Americans. It doesn't work that way. I wish it did, but it doesn't. Because if it did, it would have been easy to fix long time ago. But it doesn't work that way. Opponents want Congress and companies to launch a last-minute campaign against the draft of executive order. Pending executive order will temporarily bar the inflow of H-1B, L-1S, H-2B seasonal manual workers, plus some categories of J-1 workers. New regulation is going to limit the use of foreign workers who are imported via the H-1B and OPT program, Occupational Practical Training Program, which is the program that international students typically obtain upon graduating from the American universities to receive some training. They receive it for about 1 year, and then they can either be sponsored for H-1B visa or they're being sent back home if they cannot receive their status. And so the Trump said that he will forever end the use of the H-1B as a cheap labor program and institute an absolute requirement to hire American workers first for every visa and immigration program. That already is a law. It's not a new thing, but it's a very good PR. And I'm not necessarily against Trumpster, in certain things. I don't always agree with all of his stuff, but this is one of those things that I think it's just a good PR stunt for America-centric belief system. If you shut everybody out, if you shut everybody down, sure, short term it may sound really good, but I don't think that the nationalism is a solution. And you might watching this live. I'm sure that you're gonna put it in the chat, and please do. And I'm gonna jump right after this in like 2 minutes. We're gonna jump into the chat. Um, but if you're watching this on YouTube, put it in your comments what your thoughts and beliefs are. But I don't. We don't have a uh, single historical reference that shows that going into the nationalism movement and removing all of the foreign trade, all of the foreign agreements, all of the sort of exchanges with the neighbors near and far that are beneficial to the country. Quite the contrary. It for the moment, at the first, little while, yeah, everything is great because there's all this stuff that happens. And short term is beautiful. Long term, it falls apart. It doesn't work, and then the country has to go through a long term sort of reopen. So I don't know that shutting our borders in and shutting borders out, cutting off the deals and trades with everybody else is a solution. I think it needs to be improved. I think we need to work on it. I do agree that employment does need to improve, but just shutting everything off, saying, nobody gets to come into the United States. The United States was built on people coming in. So unless you are Native American, you are an immigrant. I'm sorry to tell you that stuff. I am an immigrant, and you may not agree with this stuff, and likely I am POing some of the people here who are saying, you know what, unsubscribe, I'm never joining your channel, and that's perfectly fine with me. I can live with it. I'm just telling you my truth. You don't have to agree with it. This is just the way that I see it. But, unless you are Native American, you are an immigrant. And you might not be the first generation. You might not be, the second generation. You might be a fifth generation, because everybody that I talk to that says that they're an American, which I am an American as well, but I'm a first generation, right? Like, I am a zero sort of entry point here, right? And I'm proud to be an American, but I'm also proud of my heritage as well, of where I come from. And, but when you talk to people, when you say, oh, well, like, what is your heritage? Well, grandma was from England and grandpa was from Netherlands. You're like, great, like European descent. Or, well, part of the family comes from China and then there's the other part family that comes from Brazil. I'm like, all right, cool. So we, shutting it off, shutting it down is not necessarily the solution, I don't think. But you let me know what you think and how you feel about it. And so, I think it's going to have a huge effect on many different individuals who are in in these visa entry programs that are basically not going to be able to get in or get those jobs. And I know that the hope is that if I prohibit you from hiring this person, that you will then hire this person, but that is not necessarily how it will work. And what I think I think Trump does understand business. I don't think he's an idiot when it comes to that stuff. Again, I think it's a political move so that he wins an election more than anything else. And because as a company that is going highly or predominantly international and technological, right? With the rise of internet, I can hire anybody around the world. I don't have to hire my neighbor, right? I don't have to hire somebody that lives in my state. I can hire anybody, literally anybody around the world. And with the companies that I have, I do. I don't care where you're from. If you're from the United States, awesome. If you're from Europe, amazing. If you are from Latin America or from Asia, cool. Australia, uh, let's do it, right? So I don't have an issue with it. I look for people that have the best quality in what they can do and have strong work ethic. That's it. That's it. Can you do the job and are you going to do a job really well? That's what I look for, and that's what more companies are starting to look for. And so I don't know it's the right move, but again, I could be wrong. So there you go. Hopefully, you've enjoyed it and enjoyed my commentary and stuff. I'm going to go in and jump, hang out with people watching this live on One Deal Away. If you're watching this on YouTube, do subscribe and consider come and joining me on onedealaway.com. And again, if you want to learn how to invest in crypto and don't want to go into an ETF or anything like that, then join me, onedealaway.com, and look for Crypto 101. It is offered free as of the date of this recording, which is not going to be free for forever, but it is now that we are creating it. So thank you for watching. Until next time, stay forever money blessed. And do remember, you are only one deal away.